Hello everyone, welcome to the ACCA Passpoint channel. So today we are going to solve question number 1 of March-June 21. The question name is pair cutting. We all know question number 1 covers 50 marks in your exam. So make sure you guys are attentive while solving this question. Also, you should open this question on your CBE platform. In the previous two lectures of the March-June 21 question number 2 and 3, I have mentioned that on your CBE platform, the question is change. Change means previously there were few other things in the old CBE question, but now as the CBE has updated, so the ACCA technical team also updated their questions as well. In the previous questions, we used PBT for the we use total assets for the materiality, but in this case, I think it's a revenue or PBT for the materiality. But once we start solving these questions, we will get it. The requirements and the content or exhibits are same on the new questions or on the previous question. So if any student want to open this question on the CBE, it's up to you. Or if any student want to search this question on the Google Chrome, then you can also go for this one. Okay, let's start question number 1, March-June 21, Pale Company. It is 1st July 2005. You are a manager in the audit department of Chief and Company, a firm of CCA. You are assigned to the audit of P Company, which has a financial year ending 30th September 2005. P Company manages timber plantations, its core business being the management of timber plantation and the production and sale of a range of timber products. It is not currently a listed entity. So one thing, it's clear that this is not a listed entity. The following exhibits available on the left-hand side of the screen provide information relevant to the question. Let's read each exhibit one by one. So this is exhibit number 1, partner's email. We all know in question number 1, we have to make a briefing note, and the start of the briefing note we covered from the partner's email. As in the briefing note, the to will become from and the from will become to audit manager from Harvey Rivers audit engagement partner. Subject audit planning for Pale Company, date 1st July 2005. Hello, I have provided you with some information which you should use to help you in planning the audit of P Company for the financial year ending 30th September 2005. As you know, P Company is a new audit client. So one thing we also identified from the partner's email that this is a new client. Last year audit is done by another audit firm. So it means we do not have any prior knowledge of this client. I hope you are looking forward to working on this interesting new client, which is the first timber company we have secured. So also it means we should have to evaluate our competency, whether we are competent in performing the audit of the company. So these are the things which you should have to consider while writing the answer. Okay. You should also be aware that the management team is planning for Pale Company to achieve a stock market listing within the next 2 years. So it means the Pale Company is also considering to become a listed entity within next 2 years. Based on the analysis I have done on this industry, it is appropriate for overall materiality to be based on profit before income taxes. Why not PBT? Because this is the hint given by the examiner that, as you know, IFRS 18 has been introduced. So based on that, the examiner changes their percentages of the materiality threshold. Means the materiality threshold has been changed. In the previous IAS 1, we calculated the materiality on PBT, profit before tax, but now it's PBIT, profit before income and taxes. as this is a key factor for investors and providers of finance. Remaining all the concepts are same. If you have not watched the IFRS 18 lecture, how IFRS 18 can be tested in your triple exam, then you can watch that lecture on the ACCA Passpoint YouTube channel under Block 3 lectures. I require you to prepare briefing notes for my own use in which you evaluate the significant business risk to be considered in planning the audit of bail company. This is part A. Part B is evaluate and prioritize the significant audit risk to be considered in planning the audit of bail company for the financial year ending 30th September 2005. So these are two parts. Let's see about part C. Note, in relation to the company's timber plantation asset referred to in Exhibit 4, you are only required to consider audit risk relating to changes in fair value. Now, this is specific. Any other relevant audit risk relating to the timber plantation asset will be dealt with separately later in the planning stage of the audit. If there is any note, then you should have to follow it. Why? Because it will help you in achieving the professional marks of the communication skills. Design the audit procedures to be performed in relation to the change in fair value of the timber plantation asset caused by the recent storms. Your procedures should include those relating to the evaluation of the expert appointed by management and the work they have performed using Exhibit 5. So now for the part D, we just use Exhibit 5. Using Exhibit 5, explain the ethical issues and other audit planning implications which arise in relation to the phone call from the company's chief finance officer from your company. Okay, now we are done with all the requirements. Let's start reading the background information. Okay. So guys, please be attentive because we will cover all the exhibit from exhibit 1 to exhibit 4. Then we will start solving the each part. Okay. So this is exhibit number 2, background information. P company owns and manages several large timber plantations. Approximately 5% of the trees are harvested each year. The company immediately processes the timber which is harvested from felled trees in its own sawmills, a facility where trees are processed into logs and other timber products. The processed timber, which is mainly logs and planks of wood, is then sold to a range of customers. So, this is your inventory, including construction companies and furniture manufacturers. Approximately 30% of the timber is exported. Now there is a word export. So it means you have to write a risk on the foreign currency. Okay, so these are the keywords which you should have to pick while writing the business risk. How you can identify or pick these risks? Only if you have watched the business risk lecture under block 3 on ACCA Passpoint channel. Your firm was appointed as auditor to Pale Company in March 2005 following the resignation of the previous auditor, her associates. As part of your firm's client acceptance procedures, communication was received from her associates indicating that the reason for resignation was due to retirement of the partner responsible for the audit, and they had no issues to bring to your attention regarding the audit. So, with this communication, there is no such indicators that the client is involved in any other activity which affects the client integrity. Client means parent company. P company has a small internal audit department within two staff. You report to the company's CFO. As the company does not have an audit committee, this is a control weakness, serious control weakness. So that's it for exhibit number 2, in which we identified that the 5% of the trees are harvested each year. PEL company export 30% of timber. We are the first client, means PEL company is the new client, and we have experienced the timber plantation client first time. Also, we communicate with the previous auditor, and in that communication, there were no integrity issues. Also, in the PAL company, there is no audit committee and internal audit department is also small. So these are the issues we have picked from the exhibit 2. Let's read the exhibit number 3. This is very important because in which most of the financial data have been provided. Okay, let's check. Meeting date 10 June 2005. Attendees Harvey Rivers Audit Engagement Partner Mark York, Chief Financial Officer. Accounting Policies. Mark York confirmed that P Company applies the requirements of IAS 41 Agriculture as follows. Standing timber means the timber is still as a tree. Standing timber, which means trees which are growing in the timber plantation prior to being felled, are biological assets. Okay. Measured at fair value less cost to sell. We all know as per IFRS, IAS 41 agricultural, the initial measurement of IAS 41 is cost. Okay. The change in fair value less cost to sell is included in profit or loss for the period in which it arises. Yes, this is correct. Fell trees are agricultural produce which are measured at fair value less cost to sell at the point of harvest. Means at the point of harvest, they are measured at fair value less cost to sell. Immediately after felling, trees are processed. So now it becomes the inventory. So that the value of felled trees awaiting processing is minimal at any point in time. Processed timbers such as logs are measured in accordance with IAS2 inventories. A technical expert from the audit firm has confirmed that the accounting policies outlined above appear appropriate in the context of PAL company's activities. Now, international expansion. Please be active. P company operations are currently all based in its home jurisdiction, means local operations. However, the board has recently approved the acquisition of several large areas of tropical rainforest in far land. This is a big indicator. A remote developing country, the expansion will allow the company to process new types of timber for which there is significant demand from luxury furniture manufacturers. The acquisition of the areas of the rainforest will cost $25 million, and the purchase is due to take place in August 2005. The cost of $25 million is equivalent to the fair value of the rainforest. Farland uses the same currency as PEL company, so the expansion is not creating any foreign exchange risk exposure to the company. Okay, guys. In the previous exhibit, exhibit 2, we studied that the 30% timber are export. You do not need to link that point with this one. Why? Because this is another international expansion. Means now they are going to enhance their business to another market. So this is another risk, and the previous 30% timber export was another risk. The purchase is being funded through a share issue to existing and new shareholders. Okay, so now they are giving their shares, who are mainly family members of the PAL company who established the company 20 years ago. A share issue was the only option for funding the international expansion as the company is at the limit of its bank borrowing agreement. So it means there is a possibility that they overlook the covenants. An international development agency has agreed to provide a grant of 21 million to assist PAL company in its far land expansion on condition that the expansion represents sustainable and ethical business practice. So this is a condition which PAL company should have to follow. Now, the grant is provided specifically for training the local workforce and building accommodation for the workforce in a town near to rainforest. The grant is due to be received in September 2005, means at the end of the year, and relevant expenditure will commenced in November 2005, Mark York is planning to recognize half of the amount received as income in this year's financial statement on the basis that it will cover some of management expenses in planning the internal expansion. Okay, guys. So now we have studied too much. So make sure you are consuming all the content. Okay, guys. Now, gold standard. This question is very, very important and very tricky. Why tricky? Because all the points, all the paragraphs are interlinked with each other. Now we are studying another paragraph which is gold standard. Let me show you how it is connected with the previous paragraph of the lecture. So now gold standard. The company is proud to have recently been awarded an industry gold standard accreditation for its sustainable timber management. To achieve the gold standard, which denotes the highest possible level of sustainable timber management and ethical business practice, the company must adhere to a number of strict standards. Highlight this thing because the gold standard accreditation criteria is interlinked with the strict standards. This includes maintaining the biodiversity of the timber plantation, ensuring that rare species of trees are not harvested, and that animal habitat within the timber plantation are preserved. Means you have to harvest those trees which are environment friendly. To maintain the gold standard accreditation, one condition is that at least 80% of timber sold must be harvested according to the strict standards set by the industry regulators. The gold standard applies to all of the company's activities, including the far land expansion. Remember the new international expansion. Now you guys can understand all the points are interlinked with each other. If PEL company want to sustain with the gold accreditation, with the gold standard accreditation, then PEL company should have to follow all the strict standard requirements. Now, contract with Royal Company. The company's revenue has increased this year, largely due to its signing a significant contract with a new customer. This is a significant customer, Royal Company. The contract was signed on the basis of PAL Company receiving the gold standard accreditation for its timber. Look, the third paragraph is interlinked with the second paragraph. Each line is interlinked with the previous thing. Legal case. A group of employees has recently commenced legal action against the company, claiming that breaches of health and safety guidelines regularly take place. The company has made some redundancies this year, which has put pressure on the remaining staff to work harder in order to maintain productivity. The employees are alleging that this has caused an increase in the number of accidents at work, some of which have resulted in fatalities. The company's management and legal advisors believe that the legal claim, which amount to 19 million, is unjustified and will not be successful. Mark York does not intend to recognize a provision for the claim or make any disclosure in the financial statements in relation to this issue as it is at such an early stage in the legal proceedings. So, what do you think? This statement of the Mark York is correct or not, as they are not going to make provision or the disclosure? This is incorrect. Of course, we all know the IAS 37. Now, guys, news report. Mark informed us that a news report has emerged in Farland. Which report? Alleging that Pale Company paid a government official bribery, a sum of 15,000 in order to secure the purchase of the tropical rainforest. Now, what do you think? If any person or any organization is involving in this activity. What do you think if this activity of that organization has been circulated on the internet? So don't you think the customers, such as the royal customer, the major customer, will bounce back from this deal, which is spreading quickly on social media, and to inform us that these incentive payment, this is not incentive, my dear, are routine business practice in Farland. What if they are routine business? You have to be away from such activities. Use of expert, look, block one topic, use of expert, change in fair value due to recent storms. In the last month, several storms caused damage to some areas of timber plantation. An independent expert has been appointed by management to determine the extent of damage caused and to quantify any financial implications, including determination of the change in fair value of the standing trees which have been damaged by the storm. The expert's report indicates a large number of trees have been completely destroyed and many have been badly damaged. Based on the expert's report, management has determined that a reduction in fair value of 7.5 million. How the management has determined that fair value of 7.5 million, even though the experts report indicate a large number of trees have been completely destroyed, should be recognized in respect of the timber plantation asset recognized in the statement of financial position. So you have to be skeptical because there is a mark for the professional skepticism skills. Whenever there is a word whenever there is a word determination or management estimates, as we all know, fair value is an estimate, so you have to be skeptical. Okay, let's read the exhibit number 4, then we will move to the answer slide. Okay, the information in the table below will be published as part of the annual report in a section titled Key Results for the Year, which form part of management commentary on the company's performance. Oh my God, all the new things of IFRS 18 has been incorporated in this question. The financial information is before recognizing the change in fair value of the timber plantation caused by the recent storm and also before accounting for the government grant. Okay, projected 30th September 2005, actual 30 September 2005, and the change. So now in this case, in this question, the examiner also gives you the percentage changes. So it's a good approach. We will follow these figures: revenue, operating profit, profit before income, and taxes, which if any student want to solve this question by their own, then you have to use the materiality, then you have to calculate the materiality on this figure. But I suggested that I am following the old approach, so that's why my materiality threshold will be different. I will told you about the materiality which I have chosen once we move to the answer slide. Then we have social and environmental key performance indicators. Percentage timber harvested in line with goal 82%, 3% decrease. Number of employees 1300. So number of employees also decreasing. Total staff days lost due to accidents at work 78. Oh my God. Significant impact of 13. You are also provided with the following information relating to balances which are extracted from management accounts as 30th June 2005. Total assets 550 million, timber plantation 500 million. This amount relating to standing timber is before accounting for any change in value caused by the recent storms referred to in Exhibit 3 we just covered. Cash 4.5 million. Cash levels are depleted this year, means they are reducing. You can compare due to inflationary pressures and demand for higher wages from our employees, which we have met. Okay, if they met this condition, then why their number of employees have reduced? This is serious risk. Okay, guys, let's move to the answer sheet. Make sure you guys open this question because I will not move to the questions again. So these are the important points for you. Please read. I am giving you 2 minutes. Okay, guys, let's read the professional marks. Professional marks will be awarded for the demonstration of skills in communication, analysis, and evaluation, professional skepticism and judgment, and commercial acumen in your answer. So these are all the professional skills which you should have to cover in your answer. Okay, now move to the answer. This is question number one, March June 21 PAL company. Briefing note to Harvey Rebels audit engagement partner from audit manager subject audit planning for PAL company. Date 1st July 2000 XY. Okay, before reading the introduction, I have an important announcement for you. Look, if you are studying with any tutor or in the future, if any student want to follow these lectures, so trust me, guys, these lectures are not a secondary source of study material. In these lectures, I have covered every important thing. All the complete articles and all the content in your syllabus, which you can compare on your ACCA website. If there is any topic is missing, tell me. I will also try to upload that as well. But trust me, guys, I will not stop myself because after this attempt, after your September attempt, I will add few more things, which I personally feel that there are so many other things which not from your exam point of view are important, but for your professional life. If any student want to pursue their career in audit, then there are other things which are very, very important for you. So, if any student is interested in other and important content with respect to audit, assurance, and related services, then please comment down so that I can upload all the additional content on this playlist, which is AAA Block Voice Lectures. Otherwise, I have to create a separate playlist or a separate channel on which I will try to upload all the important content and informational videos. Also, there are many tutors who would suggest you to just solve the recent questions, and the recent questions are from the 24 to 25 attempts. But as you know, I have started solving the questions from the 2020 or 2021. Why? You can understand that this question is from the March June 21 session. But now this question is tested in the upcoming exam. Similar kind of questions might be tested in your upcoming attempt. Why? Because in this question, the examiner adds all the important things which are relevant in your future exams as well. After the replacement of IAS1 by the IFRS 18, you have to choose the materiality based on profit before income and taxes, whereas in the previous sessions, you all know you calculate the materiality based on PBT. So that's why my approach is to follow or solve all the past papers which are available on your CBE platform. There are few other past paper questions which are not available on your CBE platform, but I will try to collect all those past papers from other sites and then we will solve them as well. Okay, guys, let's read the introduction. This briefing note aims to evaluate the business risk, significant audit risk, principal audit procedures, and ethical issues. Now, business risk. First, we have timber export. Look, this is what I was talking about. Approximately 30% of the timber is exported. This I just copy and paste from the question paper. P company is exporting one third of the timber, which might result in a foreign currency risk, as both countries have different currencies. Further, the laws and regulations relating to the export of both countries are also different, which can further impact the pale company operations. If non-compliance is not corrected, pale company may face an export ban, which adversely affect pale companies' export sales and profitability, as it can be seen that the missed export sales due to industrial actions are about to 2.1 million. Now, international expansion in farmland. The board recently approved the acquisition of several large areas of tropical rainforest in farmland, a remote developing country. Again, copy and paste it from the exhibit. This is the Pale Company's first experience processing new types of timber in farmland. Again, this line is copy pasted, which can result in management cultural issues and Pale Company. Why cultural issues? Because the Pale Company management are not familiar with their culture, might not be aware of the rules and regulations of the farmland. Further, the failure of non-compliance with farmland regulations may result in high fines and penalties, and the high price volatility might impact the reputation and profitability of the Pale company. Now, bank borrowing. A share issue was only option for funding the international expansion as the Pale company is at the limit of its bank borrowing agreement. Again, copy pasted. This shows that Pale company is highly geared as the debt ratio is higher and the possibility of securing further loans is quite low. If no further loans were obtained, then the liquidity position of the Pale company would worsen more as cash levels depleted by 33.8%. How to calculate this percentage? First, you have to calculate the difference between this year figure with the last year figure. Then the difference will be divided by the last year figure. Then you will get the percentage. This year as compared to last year. And due to this, there is a possibility that the International Development Agency may demand a full repayment of the grant. Why? Because of in Pale company may not be able to meet the conditions. Now, gold standard accreditation. Pale company is proud to have recently received an industry gold standard accreditation for its sustainable timber management practices. This accreditation is essential for Pale company as the significant increase in revenue of 5.5% comes from Royal Company, a new customer associated with the gold standard. Additionally, failure to meet the requirements of the gold standard could result in the loss of Royal Company, the significant customer, remember, which would adversely impact Pale Company's revenue and profitability. Why revenue and profitability? Because if we are going to lose the significant customer, of course, it will directly hit the revenue. Now, the legal case. A group of employees has recently commenced legal action against the company claiming that breaches of health and safety guidelines regularly take place. This legal claim can affect the Pale company's reputation as the total staff days lost due to accident at work have increased by 20% given in the exhibit 4, and the number of employees reduced by 120 this year again given in the exhibit 4. Further non-compliance with health and safety may result in high fines and penalties which may affect the profitability and might result in the loss of gold standard accreditation as it is against the ethical requirement. So this is how you have to link your answer with each paragraph. If you want to secure full marks, then your drafting skills should be like this. Again, there is a question how to get full marks. The only thing and the only solution is to start writing after watching these lectures. Okay, now we have part B, audit risk. Audit risk materiality. Okay, guys, make sure your presentation should be like this because I was taking few sheets or scripts of the students in which they mentioned the materiality paragraph before the business risk. This is wrong. Materiality paragraph should become after business risk under the part B, audit risk or risk of material misstatement. Also, materiality paragraph should be the first paragraph of the part B. After that, you have to write your risk of material misstatements and audit risk. If you change the sequence of these paragraphs, then of course you will lose your professional marks. Okay, so now in this question, I have taken the materiality threshold such as total assets. Why not PBIT? Because I already told you that on your new CBE, the examiner changed the questions. The content are still same, just there are few alterations, such as in the question number 3, the examiner changed few parts. And in the question number 2 of March June 21, the examiner removed one part. And in the question number 1, the examiner changed the materiality threshold. In the new question, the examiner asked you to calculate the materiality based on PBIT. But in the previous question, the examiner mentioned that you have to calculate the materiality based on total assets. So if any student want to solve this question on PBIT, you do not need to do anything. Just change total assets with PBIT and 550 with the PBIT amount, and the percentages for the PBIT is 5% at lower end and 10% at higher end. All the remaining things and concepts are still same. Now, pale company is a capital intensive industry. Capital intensive industry means industry in which there is a major amount spent on the assets. There are two kind of industries, capital intensive and labor intensive industries. Why labor intensive industries and what are the labor intensive industries? Labor intensive means industries in which there is high involvement of labor, such as they are spending much amount on the wages, salaries, means high amount is spending on the expenses. Also, I don't know how many students know about this fact that this is March June 21 question. So before 2022, the engagement partner did not mention that you should have to use this figure for the materiality. That's why I have chosen the materiality based on total assets. Why? Because this is a capital intensive industry. There are much amount or more amount spent on the assets. So based on this judgment or based on this methodology, I have chosen the total assets. But now in the updated CBE, the examiner or the engagement partner mentioned you that you have to choose PBIT. Okay, guys. Pale company, a capital intensive industry, manufactures and sells timber products. Materiality for pale company should be determined based on total assets, which are 550 million this year. The materiality thresholds are 1% for the lower end and 2% for the upper end. Okay. Pale Company is the firm's new audit client and will be listed within next 2 years, and the audit risk arises, so materiality should be determined at the lower end, which is $5.5 million. Why? 1% at the lower end multiply by the 550 million gives the 5.5 million. Now risk number 1. Remember the requirement, evaluate and prioritize. So evaluate means the significant, prioritize means the risk with high amount of materiality. The reduction in the fair value of timber by 70.5 million is material to the financial statement as it is above the materiality amount of 5.5 million. As per IFRS 13 fair value measurement, it is the existing price to sell an asset or the price paid to transfer a liability in an orderly transactions between the market participants at the measurement date. This is a non-adjusting event. This is a non-adjusting event as the condition did not exist at the reporting date, which should be disclosed in notes to the financial statement. Again, repeating, this is a non-adjusting event. Remember IAS 10 events after reporting date. If you don't know the adjusting and non-adjusting, then you can watch the lecture under the SPR playlist. This is a non-adjusting event as the condition didn't exist at the reporting date, which should be disclosed in notes to the financial statement as it is a significant event that management didn't disclose. Further, PEL company uses IAS 41 for standing timbers, and any change in fair value will be reported in profit and loss account. Therefore, there is a risk that management may not record this loss in profit and loss, which may result in an overstatement of assets and understatement of expenses. So, guys, this is how you have to write your answers. Now we have grant risk. The amount of the grant from the International Development Agency, $20 million, is material to the financial statement as it is above the materiality amount that is 5.5 million. As per IAS 20, grants or government grant should only be recognized when there is a reasonable assurance. This is the condition of the grant, that the P company should comply with the grant's conditions and the grant will be received. The grant is specifically, this is the condition, the grant is specifically for the training and building accommodation for workers, so it should be matched with related expenses rather than recognized income immediately. Therefore, there is a risk of understatement of liability as the deferred income is not recognized and overstatement of profit and revenue as Mark York is planning to recognize half of the amount received as income in this year's financial statement. Now we have legal case. The amount of the legal claim $19 million is material to the financial statement as it is above the material amount 5.5 million. As per IAS 37, provision, contingent liabilities, and contingent assets. Provision is recognized when there is a present obligation, and the outflow is a probable and reliable estimate. Accidents happen due to overproduction by the limited staff in case of redundancies in a legal obligation as it is associated with the PAL company's gold standard accreditation. Now everything is interlinked with each other. So how you guys can ensure that you just write a general statement and general risk and it will help you in securing your marks. Please guys be attentive. Your exam tests are just around the corner. Okay, so failure to record the provision is a misstatement that results in an understatement of non-current liabilities and expenses. Now, increase in inventory. The amount of the processed timber of 15.4 million is material to the financial statement, as it is above the materiality amount of 5.5 million. As per IAS2 inventory valuation, inventory should be measured at lower of cost or NRV, net realizable value. The increase in inventory amount this year as compared to last year is 67%, which is significant. And the export condition is not good due to industrial action. Therefore, there is a risk that inventory might be obsolete and the management may not record it at NRV. This will result in an overstatement of inventory and an understatement of profit. We all know the significant risk in the inventory is about the valuation, that the inventory is not valued correctly. Okay, going concern. PAL company is at the limit of its bank borrowing agreement, and the depletion in cash is 33.8%, which indicates that the PAL company is facing a high gearing issue. Further, the loan conditions only depend on the share option to the family members. And if the loan is not obtained, then PAL company may face liquidity issues and may not be able to continue as a going concern, which management of the PAL company may hide due to fear of the loss of gold standard accreditation and the easiness for the process. Now, small internal audit department. PAL company has a small internal audit department within two staff who report to the company's CFO. Remember, there were no audit committee. As the company does not have an audit committee, this is a weak in internal control, which indicate that the objectivity of the internal audit department is impaired as they report to the chief financial officer. Further, no audit committee gives rise to the management override of control and makes it difficult for the audit team to perform procedures, which increases the detection risk. Okay, guys, in these questions, there is one significant risk. What if any student told me about this significant risk? I have not written in this question, but there is a one significant risk. Let me give you an hint. This is your new client. Okay, this is your new client. I think this hint is just everything. Now, if any student is sharp, then he or she will easily pick that risk. So you have to comment down. This is the very significant risk which I have not written in this question. Why? It's a surprise. It's your test. You have to identify, pick, and then comment down. I will check which student is writing a correct risk. So now, in the end, you have to give a conclusion. Conclusion is must for the part B, for the audit risk or RONM. Now, audit procedures. Review the valuation. Remember CASP, case specific, source, action, and purpose. Review the valuation report by the independent expert to confirm the accuracy and the estimates used in the valuation of the fair value. Review the draft financial statement to confirm that the changes in fair value have been appropriately recorded by the management. Review notes of the meeting with an independent expert to confirm the basis used in determining the extent of damage. Recalculate the fair value working determined by the valuer to confirm that the calculation is accurate. As per IFRS 13, discuss with management the basis of recording the large number of trees which have been destroyed. Review the qualification of the expert to confirm that the experts appointed are independent, competent, and experienced. Remember ICED criteria of Block 1, Lecture number 6. Now you are left with part D. This is your assignment. I have written the complete answer, but I would like you to solve this question. For that, you have to read the exhibit number 5. Okay, guys. This lecture will be uploaded on ACCA Passpoint channel under the playlist of AAA topic voice past paper. Okay. All the lecture notes are attached on the drive, Google Drive. And the drive link of all the previous lectures you can find under the description. Okay, you have to click on the see more on the description. Otherwise, you can't see the topic wise lectures. So guys, that's it for today's topic. We will meet in another past paper questions. Till then, take care and goodbye.